Welcome to the Millionaire Next Door podcast with Robert Curtis, CFP, accredited investment fiduciary from Signature Estate and Investment Advisors. In this podcast, we help successful wealth accumulators like you looking to transition to a work-optional lifestyle by helping you build strategies for growing and maintaining your wealth. Robert draws from years of experience and fiduciary responsibility and interviews guest experts to help you build reliable strategies to grow and maintain your wealth. Now, on to the show.
Hello, everyone. Welcome to the Millionaire Next Door podcast. Thank you so much for tuning in. We really appreciate it. I've got another terrific topic, something we've delved into quite a bit, infrastructure, private, public infrastructure. We're at a very, very interesting time where this is all coming together, and we are going down a road where these needs are going to need to be met by society. I have a terrific guest with us today, Michael Underhill, and he is the Chief Information Officer at Capital Innovations. He's been doing this for a long time. He manages capital. He's one of the partners we interact with and collaborate with, so we're really pleased to have him here. Michael, welcome. Thanks so much for being here.
Great to see you again.
Yeah. Maybe you could introduce yourself and then just dive right into it. I love you sent me a piece recently where you compared this wave of what's going on to Led Zeppelin hitting the scene at the Royal Albert Hall in 1970. I too watched this documentary. I can't remember which streaming service, if it was Netflix or Apple. It's terrific if you're a fan of rock and roll. Really the first 2 years when they came out and the buildup. But I love that analogy. And my goal throughout this podcast is to not just go totally left turn and talk about that the whole time. So let's stick to private infrastructure. Welcome.
Sounds great. Thanks. I spent time growing up in Western Pennsylvania. Working class family just south of Pittsburgh. And my father used to work in these steel mills, back in the 60s and early 70s. And there weren't many babysitters around then. And my dad was a military vet, World War II Marine Corps vet from Pacific Theater War. He wasn't a big fan of babysitters. What he would do is grab me, put me in the pickup truck, and he'd take me down to West Virginia. I would go help him work on a power plant. I'd go into steel mills, and he would actually show me how steel is made. He would show me in a boiler or a power plant how energy is created. And so I always grew up in that milieu in the Rust Belt of always being inquisitive, intellectually curious, right? And I went down the road of trying my hand at music. I spent some time studying economics and focus on statistics and math, and the similarities between math and music are just phenomenal. And I look at what's happened over the last 30 years as an investment professional, spending time investing in infrastructure. That's why I use the analogy, infrastructure has arrived from backstage to now center stage. And we see what's occurred over the last 30 plus years in this business. What I've seen is it's arrived like Led Zeppelin at Royal Albert Hall in 1970. And I say that because it's moved from sort of niche to core to now it's expanded rapidly. And if you look at just total addressable market share, that it's expanding fivefold. It's moving as an asset class from $3 trillion to $15 trillion. And that's the asset class now powers clean energy, digital life, economic resilience. You can look at multiple things, but we talk about infrastructure and the mega trends that have been built up over the last 30 years. Three big mega trends, pillars that are driving this 30 to 50 year investment opportunity set. Number one is energy transition. Number two is digital transformation. Number three is enhancement of aging infrastructure. And I can go a mile deep on it, but let me hit the pause button there. And I feel like I should have my finger should be pointing to a sign that says no stairway. Like I can't play Stairway to Heaven and drone on and on and on. So I'll stop here and let you ask the question.
Oh yeah, sure. Yeah, there's a lot. It's really interesting. I've been doing this and advisor second and third generation clients for almost 28 years. And believe it or not, prior to that, I had a background in public finance. So we were looking at roads and we had a utility electric and water. It was not a center stage main act, but we knew, it was an older city, things were falling apart. This is happening everywhere, but now this has become a main, a main attraction with all this data. Everybody, we were pre-talking on the call about the trains you're taking and you're commuting and the Wi-Fi and the expectation. So now we all kind of go bananas if we're in a remote area and we can't get it for a few minutes, until Starlink clicks in. But why don't you take us down the road, this 3 million to 15 trillion, the sort of underground to mainstream, all these things you spend time thinking about and sharing the story and maybe helping people understand that time frame, how this is actually going to occur, the dollar flow. Do we run into shortfalls not getting there fast enough? Just take us through all of that, if you would.
Yeah, of course. So thank you for all those questions. So when I look at this, it's a global phenomenon, and when we break it down into these mega trends, right? So you look at energy transition, the transition from coal-fired power plants to natural gas-fired power plants, complemented by hydroelectric, nuclear, large-scale nuclear and small modular, which we can go down those rabbit holes. And you look at solar and wind and some of the economics, and part of that paper I sent to you is just you look at the levelized cost of energy. Solar is becoming cheaper. You're seeing better economics in wind in certain geographies. Utility scale, nuclear generation. We're starting to see an acceleration with the new Secretary of Energy, Christopher Wright. And I think when we look at energy, why is it so powerful? Because it's a long 30 to 50 year duration trend, long-term power agreements. Artificial intelligence is consuming 3% of all U.S. power generation today, just in the U.S., 3%. By 2030, it's going to be 43%. So moving from 3 to 43%. And 2030 is not 5 years away. It's 4.5 years away, effective last week. So the quantum in which the numbers are changing, particularly in utility scale power generation with artificial intelligence consuming that kind of electricity and power, there's a race, an arms race to build more power for the data centers. Combine that with the fragility of the electrical grid, whether you're in California or Connecticut, Minnesota or Texas, rolling brownouts and blackouts, lacking battery storage and the fragility, instability of the grid, right? So you've got more power that's being consumed, an insatiable need by artificial intelligence, industrialization, robotics, the fourth industrial revolution is going on, as well as onshoring. You've got this fragility of the grid and the inability to meet our power needs today, absent AI and what's occurred in the last 2.5 years. Things like ChatGPT and OpenAI have been made available to the public, right? So you've got this demand side pull, you've got this absence of power generation. And so the opportunity to invest in energy, oil, gas, nuclear, solar, wind, hydroelectric. We've done it over the last 30 years, but made a good bit of money in nuclear in the last few years. And the technology that's going on with nuclear fusion now, MIT just put out an article last week. I did an interview with Barron's about what's going on in fusion. And that's been accelerated with nuclear fusion in the next 3 to 5 to 7 years, commercial viability and scalability. So I think we need more energy, not less, even in the US, but globally. The arms race to generate power, clean power through nuclear, through renewables. And I even look at some of the things that are going on with hydrocarbons, the shift from coal to natural gas. That was facilitated by technology. In the early 2000s, multi-directional fracking drilling for natural gas came on the scene. And when it did, it facilitated better exploration, production, higher production levels for gas, that lowering the prices for natural gas. And these utilities company CEOs in the US said, we can shift from coal to natural gas. The price was almost a fourth of coal at the time in early 2000, I think 2005. And between 2005 to 2023, the US utility power generators have reduced their carbon emission footprint by 25%, just gently shifting from coal to natural gas. Now you're starting to see development of nuclear, large scale nuclear and small modular reactors, where the utilities are now applying nuclear technology complemented by solar, wind, and battery storage. So utilities look sexy. And within that energy transition milieu, power generation utilities are really, really an interesting place in both public and private markets. We've made a good bit of money in the last 10 years investing in them. So I think that's been incredibly powerful. And that's just one big megatrend, energy transition. I can talk to you about the digital transformation, Robert, but where do you think is the best place to go from here?
Well, I definitely want to go further down this rabbit hole, but one major thought comes to mind. You mentioned this 3% going to 43% of energy demand. And what's interesting, we're in 2025 to 2030. So I deal with bond portfolios. I'm always thinking about future dates. It didn't really hit me until you said that 4.5 years. And so we're talking an arms race. Is that even doable, or we're just going to do the best we can? I'm coming up with this analogy of, giving Joe Montana the football, down 10 points with, 45 seconds left. Joe, he could certainly get a touchdown. Can he get 2 and a field goal? But give us a little sense, because it sounds like there might be some hiccups along the way, putting it mildly. Or what's your thought? I don't want to scare people, but that's massive demand. How's that going to work, and how confident are you that we'll get there?
Massive demand. $112 trillion needs to be invested to meet this energy demand. Where's the money going to come from? It's not going to come from politicians raising taxes. There's no political will to raise taxes. You've got a massive deficit. We can talk about the implications of one big, beautiful bill, but I think when we look at it, that challenge will be met with private capital. So funds that we invest and others invest will be invested in utility scale power generation. Nuclear, which we talked to our team last week about, they're building energy parks. They're going out and raising $10 billion of private capital just to build energy parks where small modular reactors. Think about the technology that it's been used in Navy subs and aircraft carriers for almost 60 years. Safe, clean, small nuclear. So those small modular reactors fit within a conference room. And these energy parks that they're building are in major areas where there are data centers and high density population areas. And so innovation has always solved, and the innovation leveraging technology has always solved the problems. And whether you're talking about food scarcity, energy scarcity, we really need to lean into technology. And I think I've been a big fan of Christopher Wright, the Secretary of Energy. He put together a paper that he posted February 9th earlier this year, our energy independence. We actually have a cogent energy policy for the first time in the history of our country. We have a cogent energy policy under Christopher Wright, and he's fast tracking small modular reactors and basically saying, here's the approval process. You can now not take 3 years for approval. It takes 1 year. And it was recently announced by Oklo, a company that focuses on small modular reactors. By next summer, they're going to have somewhere between 3 and 6 nuclear reactors fully operational on military bases in the US. So to your question, it's an arms race. Maybe you need someone with the impressive CV of Joe Montana. I'd have to say, we have a dozen Joe Montanas in the energy sector right now. So it's going to take more than one player. It's going to take multiple players with multiple skill sets. And to your point, 2 touchdowns and kick a field goal. It's going to take a lot of people pushing on this problem to address it. Do we have the wisdom, wealth, and work? We do in this country, and bring it to the table. Christopher Wright at Energy, he's trying to help prosecute the mandate of better, cleaner energy, lowering the regulatory approval process while maintaining compliance and safety. And so I'm fairly bullish on energy within the US. And when I look at some of the other regulatory issues in the EU, you've just seen it. It's bogged down their economies. You've seen this sort of self-immolation where they push the big, renewable power generation theme and decarbonized a bit too quickly. And you saw it particularly with the Russian-Ukrainian conflict. The EU's been suffering for years because they don't have access to safe, cheap, clean, reliable natural gas. Some of the countries went back to nuclear. Take a look at what Germany did. Unfortunately, they had to go back to burning trash, coal, wood, and now they've gone full circle and said, those nuclear power plants that we decommissioned years ago, we think we're going to hit rewind on that and do that again. So I think, without rambling too much, we've got a clear mandate in the U.S. We finally have a cogent energy policy. There's a huge amount of capital that needs to be invested, $112 trillion. The amount of capital in the energy sector that's coming in on an annual basis is somewhere north of $100 billion. Private capital coming from pension funds, endowments, foundations, vis-a-vis infrastructure and energy GPs, fund managers in private markets. They're investing in all of that while, today we're closing on an energy partnership platform. Pretty interesting, because when you look at it, it's become sexy again. And over the last 40 years, the electricity usage rate went like this. And then in fall of 2023, OpenAI and ChatGPT were made available to the public. And electricity usage went like this, vertical. It went from flat line to hockey stick, like that. 2.5 years. Pretty interesting, right? So the need for more electricity and power generation is insatiable. The investment opportunity, that insatiable need, the opportunity to step in and provide capital where there's an absence of capital, that's the definition of investment return, right? You find that vacuum, you step in, you make the investment. There's great opportunity within private energy infrastructure.
Yeah, you go back to economics 101, supply and demand, right? There
That's
it
exactly
is.
what it is.
Makes a lot of sense. Things like nuclear, though, this transition, though, they don't happen quickly with approvals, but you feel like the modular, all these things. I love what you're saying. Just sort of this, what's that old saying? Necessity is the mother of invention, something like that. So, it's sort of like a Cold War. You just gotta put that team together and get it done because there's no real option. Maybe walk us down a little bit more. Some of these energy pathways, where the U.S. is positioned, big in LNG. We have a ton of it here. There's a lot of opposition to it, but it's a pretty giant opportunity. You alluded to Europe, the challenges they're having. Do we really want to depend on the Middle East? Germany saying, hey, it's no problem. We'll just trust our buddy Vladimir Putin. And, life, that was probably not a great decision, was it? Any rate, those are my random ramblings that came along when you said all that, but I'd love for you to comment on that or anything else you think that's really important for people to get to understand what's going on and how they should participate in this and be beneficiaries and kind of help the world along, but maybe help themselves in the process.
I think, so you touched upon energy economics, natural gas. So let me I'll break down some areas of energy infrastructure, and then I want to touch upon digital and enhancement aging infrastructures, just so we hit those within our segment here and can go a little bit deeper on additional segments. So when you look at energy, so the United States has 3,300 years worth of natural gas under our feet in terms of supply, right? Clean, 25% cleaner than coal. It's cheap. And something that's come on the scene just within the last few years, last 10 years plus, natural gas is being complemented by methane. And if you look at methane recapture, you can go to we have a website. There's a picture. I'm there with my colleague. We went to a methane recapture facility, which is a nice way of saying landfill gas, right? They call it RNG, renewable natural gas. It's methane gas. 4 times more deadly, toxic than carbon dioxide. It's carcinogenic if you live near it. Methane gas has been leaching out of landfills for years. They've been flaring it off, burning it. That creates pollution and negative externality. And in the last decade, what they've done is advanced technology so they can recapture that methane, treat it at a methane recapture center on site with the landfill. And then what they do is after it's recaptured and treated, send it through a pipe and connect to a natural gas pipeline where methane is mixed with natural gas, and it can be used as a source of fuel. So think about, not only do we have natural gas, naturally occurring gas, but you have methane, of which 88% of natural gas is methane. You can mix methane, retreated renewable natural gas methane with that natural gas. Now you have more fuel that's cleaner, cheaper. You're removing a negative externality, i.e. toxic methane from the environment, whether you flare it, whether it just naturally leaches. So you're removing a negative externality. It's a sustainable energy investment. And we put $40 million in a methane recapture facility in Vero Beach, Florida. And we're seeing two other available sites, one in New Mexico and one in Colorado. And I think, so within energy, just within natural gas and methane recapture and renewable energy, there's a great combination that's going to expand the available energy base for the U.S. And I think, to your earlier question, permitting, Christopher Wright, Department of Energy, he's taken the permitting process from 3 years down to 1 year and said, let's take money funding away from offshore wind, which is highly unprofitable and made sense maybe in a low interest rate, zero interest rate environment. But a higher rate environment, offshore wind doesn't make a lot of economic sense. Let's take funding, Infrastructure Investment and Jobs Act, Inflation Reduction Act funding away from, and you've seen the modification of the Inflation Reduction Act, money away from wind, and put it into something that's more sustainable, like methane recapture. So it's still a green technology, but it's cheaper, cleaner. And think about how many thousands of landfills there are just within the US, not to mention around the world. Methane recapture, renewable natural gas is one of these technologies that's, as an infrastructure investment, you're seeing 20, 30% returns. And these are long dated contracts that are 10 and 15-year contracts. So again, energy looks pretty sexy there. But I think when you look at it, what's the demand side pull on a lot of energy, particularly in the US, is digital. And when you look at digital infrastructure, United States has more data centers than some countries, right? And when you look at some of our states, Northern Virginia is a great example. Loudoun County, they call it Data Center Alley. 300 data center campuses in a fixed location. 72% of all global internet traffic goes through Loudoun County, Virginia. 72% of all global internet traffic goes through there. Pretty crazy. And, when we look at just data center development, hyperscale, sub-hyperscale, carrier hotels, the need to develop additional data centers to accommodate artificial intelligence, robotics, industrialization has increased massively. And by massively, I'm saying it's 400% the last 2.5 years, with the advent of OpenAI, ChatGPT, AI being used more broadly. And I think when you look at data center development complemented by things like, think about your cell phone, right? Cell towers. Right now, the build out from 4 to 5G is still occurring, not only in the US, but in other countries around the world. And you touched upon it earlier with Starlink, right? The build out with towers, mobile service, will not be replaced with Starlink. It'll be complemented, because even Elon said just the other day, Starlink is great for areas that are, for example, the Ukraine, sub-Saharan Africa, where there's just an inability to build coverage. Starlink will never replace fully the towers business. It will complement. So data centers, cell towers, satellite operating companies, and then fiber, the need for fiber, a lot of dark fiber that's been buried in the US, you're starting to see it being lit up all over the country. And so the investment opportunity within digital infrastructure is north of about $70 trillion. And we're seeing a build out in digital infrastructure that's never occurred in the last 30 years. I mean, we saw the telco boom in the 90s. You remember that? Mm-hmm. Well, this is 5 times larger, with data centers, telco, fiber, satellites, and it's just nothing short of stunning. And so there's a huge investment universe opportunity set, of which we've made investments in private market equity and debt, and projects that have really, really expanded the digital ecosystem and accelerated the capital runway within digital infrastructure.
Just fascinating. That carbon recapture. There's a golf course here in Glendale, California. I played years ago. It's built on a landfill. I haven't played it for years, but there were these pipes that would just shoot up and release the methane. There was no carbon recapture right in the middle of southern. So it's great to hear the energy efficiency going on. Well, let me ask you this, shifting, I don't know if you have a sense of this, but the resources for this build out, right? Everything from the fiber, uranium, all the stuff that goes into this. Are we positioned well? Do we have access to that? I know they talk about, rare earth access, minerals in China and stuff. How are we? Because commodities has not been a great space in the markets, with just a few exceptions like gold and things like that. I'm just curious how we're built for the actual things that make this up.
So to be clear, when you talk rare earth metals, right? China's got roughly about 70 to 73% of all rare earth metals in their possession physically domiciled in China. So that being said, we're working from a disadvantaged position in terms of rare earth metals. That being said, technology always addresses some of these issues in one way, shape, or form. Said another way, Christopher Wright, Department of Energy, not only are they fast tracking small modular reactors, but there's new modular reactor technology that's focused on recycling spent fuel. So think about, rather than taking the fuel rods and disposing them in a vault in a nuclear Winnemucca, Nevada, Rocky Flat, Colorado scenario waste site, they're actually working on applying recycling technology to recycle spent fuel. So there's zero carbon emissions, but zero nuclear waste. Now that's a pretty exciting thing to me within the energy sector. And you're seeing it. This group I talked to about, last week about the energy parks, that's what they're looking at. And they're partnering with, with Rolls-Royce on some of their proprietary technology on nuclear. And when you look at what's going on with nuclear, it's the technology acceleration curve it's rapidly advancing. And there's more funding going into it from the DOE, Department of Energy, but also private capital funding. So I think rare earth metals are scarce and we're disadvantaged from a position standpoint. Within nuclear technology, to your question about uranium, we'll address that through technology. And they've even gone as far as talking about retrieving some of the nuclear waste that's in Rocky Flats in that vault, nuclear waste vault, and pull it out of the ground, repurpose it and use it, which is a pretty interesting concept when you think about it. And so not only are you moving to fast tracking nuclear, but you're pulling nuclear waste out of the ground and conducting remediation. So then you can have better, cleaner, cheaper power. And so again, technology addresses a lot of these things, but I think within the infrastructure space, you're seeing more and more capital investment on a daily, weekly, monthly basis.
That is just fascinating stuff to think about, pulling that out, reusing it, getting cleaner, carbon recapture, moving us forward. I hope a lot of really smart engineers are thinking this through. Historically, all my discussions with engineers they've always talked about nuclear, and it just got. I remember, if I'm not mistaken, Jimmy Carter wasn't as much as he was maligned, wasn't his background as a nuclear engineer in the Navy? I mean, he understood physics and engineering, but we've gotten away. So this is going to happen. It is happening. What are your thoughts? So, there's 2030, but beyond, it's going to keep. Do people at the top understand this? Obviously, they do. You're saying this, Christopher Wright, and directing us. I don't know that the public really gets this message yet. So maybe this is a great service by letting them know. Yeah, I'm just going through random thoughts that really hit. This is a big, big, big deal. Yep.
Yeah, I think what I would say is, we've come into a time and a place when we've needed to address energy security. Christopher Wright, Department of Energy, again, he's the first Secretary of Energy in the history of the U.S. to put together a cogent energy policy. To be clear, Nixon tried to put together in the 1970s a national nuclear policy, and they literally drummed him out of town for that kind of thesis. Christopher Wright saying it's not just nuclear, it's oil, it's gas, it's reducing carbon emissions and moving to nuclear, smart and modular, small modular reactors, smart nuclear, reactivating 3 Mile Island in Pennsylvania and other places like that, and using infrastructure stimulus dollars to reactivate large-scale nuclear reactors and see if we can then also complement with solar, battery storage, hydroelectric, and other technologies. And so using a combination of science and technology and to your point, engineering to solve for energy economics in a thoughtful and creative way. The solution's always somewhere in the middle. It's not too far right. It's not too far left. It's somewhere in the middle in which you have multiple sources of fuel, multiple sources of power generation.
Great. There is a lot going on here. You're charged with managing a portfolio that addresses all this, right? And tries to sort of look for the best combination of returns and protections and where the smartest decisions would be made with respect to allocation of capital in this massive megatrend. Is that fair to say? Yep. And
yeah, so managing almost a $500 million fund, looking at these three big mega trends: energy transition. We try and allocate 1/3 of the portfolio, 1/3 of the fund at energy transition across multiple sources of power generation. 1/3 of the fund, digital transformation, data centers, cell phone towers, fiber, satellite opcos, operating companies. So we feel like there's a good balance between energy and digital. And then enhancement of aging infrastructure, directing 1/3 of the portfolio into, think about transportation, airports, seaports, toll roads, water and wastewater treatment facilities, retrofitting water and water management, things like that, according to the American Society of Civil Engineers, the United States needs to invest roughly $3.4 trillion to take us from a C- student up to a B student. And again, that's the American Society of Civil Engineers report card. I don't know about you. I have two sons. One's a senior in college. The other one's a freshman. If they came home with C-, there'd be a serious discussion at the dinner table. Right now, that's the situation in terms of the United States, the infrastructure, broadly speaking, is C- student.
Yeah, I've heard that before, and I can understand that. Wow, there is so much going on here. I would love to have you back because there's so many other rabbit holes and interesting areas. Do you want to give us sort of, this obviously isn't a rehearsal here, so maybe give us some concluding thoughts, some wrap up, how you're positioning, how people should think about this, and perhaps we could have you back to go further down because these issues are front and center. They're going to be with us for a long time. I love the fact that it's just become so much massive demand. It's necessary. So that's going to force the innovation. Sometimes you just have to maybe have your back against the wall to say, I gotta come out fighting here. So I'll throw it back to you to hear your thoughts around that.
Yeah, I think, to your questions, I look at this as mother necessity, almost definitely, right? And the U.S. is really good at innovation. We have the largest, most liquid capital markets, science, technology, engineering, mathematics, right? I was just at Cal Berkeley, where my son's a freshman in college at Cal Berkeley. They split the atom up on the hill. Like, there's a forward-thinking culture for science and technology and engineering in this country. And I think the innovation plus the capital markets, we can solve and use science plus capital to solve a lot of problems. And whether you're talking energy or digital or even enhancement of aging infrastructure, the American economy is very resilient, more so than any other economy. And you look at the policy tools, monetary policy, fiscal policy tools, infrastructure is an ideal asset class in which you look at these 30 and 50-year trends, long-term contracts, inflation protection, and assets that continually receive investment, trillions of dollars worth of investment, right? So I look at the world today in July of 2025, and I think in 20 years, what will this country look like? What will this world look like, right? But there's a certainty around things that the investment in infrastructure will continue. Societal development will continue, and high-performing societies, there's a high correlation, 9.92% correlation of investment in infrastructure to GDP output. Look at Singapore, invest the most. It's one of the highest performing, efficient GDP output societies. So, just concluding my rant there, I think what I'd say is, if you look across investments, all roads lead to infrastructure investing.
That's fascinating. We've been positioning it. I've been positioning it, and I think it's essential, in an economy with big deficits and maybe high PEs. And, I know you're looking at both public and private. So do you see a greater need where does more of this, how does this get filled? More private, public, a combo of both, or just a quick thoughts, and we'll kind of finish up here.
Yeah. So I think it's such a large problem in terms of trillions of dollars of required investment. Success is born of not 1,000 fathers, but 1,000 parents. You're going to need public capital, private capital. You're going to need listed infrastructure, private infrastructure. We've seen this play out in Australia over the last 30 years. We've seen it play out in the UK. In the US, you're now starting to see more public issuance of stocks and bonds for infrastructure finance. You're seeing more private vehicles where private infrastructure as an asset class has grown to $1 trillion in size, and it will continue to grow, forecast to eclipse real estate as an asset class in the next 2 years. So I think public capital, private capital will solve a lot of the required investment and solve a lot of these challenges and problems.
That's quite a statement. Forecast to exceed, real estate demand. That's really, really interesting. So, so exciting. We've both been in our careers for a long time. I mean, I'm wildly excited. I don't want to give up a seat to see how this unfolds. I think it's just going to be fascinating. And you mentioned your son at Berkeley. I have a son who just graduated from a UC in Northern California. So they're going to take it. They have pretty different views of the world. I got to say, they're coming into they are going to take the torch, and they're effectively doing it. But it is interesting. I love a great challenge. I love something that has to be engineered. America has an awfully good track record of working through that, in difficult times. And I know Buffett's been a big fan of just saying in betting against America's historically not been a great decision,
Not a successful strategy. Wouldn't do it. No. Wouldn't try it.
So I know the future's a little cloudy and there's a lot of confusion and concern out there, but this is super helpful. Once again, love to have you back. This is fascinating. Don't know if you have any final thoughts, but if not, we'll continue going down this road and this rabbit hole on this topic. I'm fascinated by it, and just see if there's anything else you want to share. But otherwise, it's been great having you here. Really appreciate it.
Thank you, Robert. It's been a pleasure speaking with you today. I'm looking forward to our next discussion, and sincerely hope this has been a good use of your time in terms of talking about how sewage is sexy and how infrastructure is the next asset class.
That's right. We used to joke at we had a sanitation department, and they used to say, your crap is our bread and butter. So, but it's sexy again. Who would have ever thought? So thanks everyone for listening. Thanks for your time, Michael. Really, really appreciate the thought partnership, the collaboration. You're sharing these. I feel like beyond just investments, this is sort of a public service announcement, something we all need to be aware of and thinking about. So please, folks, like this, share it with others. If you have questions, let me know. We'll put contacts to Michael in our show notes, and we really appreciate you being here. Thanks for tuning in, and we'll see you next time on the Millionaire Next Door.
Thank you for listening to the Millionaire Next Door podcast. Click the subscribe button below to be notified when new episodes become available. The information covered and posted represents the views and opinions of the guest and does not necessarily represent the views or opinions of Signature Estate and Investment Advisors or Royal Alliance Associates Incorporated, member FINRA SIPC. The content has been made available for informational and educational purposes only. The content is not intended to be a substitute for professional investing advice. Always seek the advice of your financial advisor or other qualified financial service provider with any questions you may have regarding your investment planning.